In this presentation, we will work an Excel problem tracking cost of goods sold. In other words, we will be concentrating in on the cost of goods sold account and tying the job cost sheet to the cost of goods sold account. This method can be a little bit easier to do because it does take less steps in order to do. Note that we will be working this problem quickly. Our goal is to get the overarching idea. So we want to work the entire problem in Excel where we can see it in a transparent type of format, in a journal entry type of format. And then as we do so, consider those types of options within QuickBooks, the mechanisms within QuickBooks, the differences between this method and the prior method that we can then implement as we enter this process into QuickBooks. Note that we will be going through this in a very slow step-by-step process as we do the example problem all through in the QuickBooks system and comparing back and forth to this Excel sheet in a very step-by-step method. Now we want to get the overarching picture. Here we are in our Excel worksheet. We're in the practice tab. You can follow along, but again, don't feel obligated to follow along because we will be going quickly here and we will be working through this again in a step-by-step process using these tabs one at a time as we work through the process, as we work through the problem later. First thing I'm going to do is hide these tabs. I'm going to put my cursor on G. I'm going to scroll over to K and I'm going to right click on those and hide those. And we're going to do the same kind of process we did last time. However, this time the beginning balances are a bit different because in essence, we're not going to be using the work in process and the finished goods. So last time we took everything from the raw materials to the work in process to the finished goods, then to cost of goods sold. And then we supported these accounts as that happened with the job cost sheets. Now, this time we're going to take everything directly to cost of goods sold. And you'll see how this changes. It's basically a timing difference because at the end of the day, of course, all three jobs will be completed. All costs will end up in the final location of costs of goods sold. But as the jobs are open, you're going to have a difference between the methods that you can use, including an accrual method, which is kind of more of a completed contract method where you don't recognize the costs until completion, or some kind of percentage of completion method, and so on. So note that this method will be easier to do then. However, just like any method, at the end of the time period, you may need to adjust it for tax purposes. You may need to adjust it for whatever necessary bonding or loan or something like that. As long as you can tie out the information and reconcile the job cost sheets, your accountant or whoever should be able to take your numbers, whatever system is working well for you, and convert it to whatever is necessary to report for. So you want to make sure you set up the system with your accountant and make sure that everybody is on the same page and you have something that's working. Now this system then can be a little bit more simple, and that's why it's going to be, and it works well within QuickBooks too, to be able to track the information and use those double-sided items. In some ways it does that a little more easily. So let's see what happens here. We're going to go back up top. We're going to do the same process. We start off the same. We're going to purchase the raw materials for $400,000. So we're going to purchase whatever we're going to use in our system for the jobs. We're going to purchase the raw materials. Now, again, you could purchase the raw materials at the point of purchase and simply apply them to the job, in which case you would just post them to the cost of goods sold and apply them to the job at that point. This time, we're going to actually track them in inventory. Also note that when we go into QuickBooks on this particular problem, you could also think, well, can QuickBooks track that inventory in terms of units? And it can do so, although it's a little difficult. It adds another level of complexity to do so. So in other words, if I was to buy certain units of an item here in inventory and I wanted to track the units and the cost of those units, then you could use the inventory tracking method within QuickBooks to do that. But it's a bit of a twist in order to do that. We have to use a different item to do that. It's a bit more complex. So just be aware of that. We'll actually work through that in this example problem within when we get to the QuickBooks side of things. The other side is going to go to the accounts payable. And that's going to be for the $400,000. So $400,000 from a debit credit standpoint, that's the debit and credit. That would be increasing the raw materials. So raw materials then being an increase of that $400,000. The other side going to accounts payable, increasing in the liability direction from $45,000 to $445,000. No effect on the job cost sheets because these haven't been going to a job yet. This time, notice we have these two accounts redded out because we're not going to be using them. Every time we hit something to cost of goods sold, that's when we're going to need to hit the job cost sheet. So we're going to go down to the next one. We have the direct materials transferred from raw materials to a job. So last time we took the raw materials, transferred them to work in process. This time we're going to skip these two, go directly down and say now they're going to a job. We're going to go directly to cost of goods sold. Notice what that does, skips 2 steps up top, makes it a bit easier in order to do that because we don't have to do those 2 steps as we go through it. However, we need to make sure that we reconcile it out, and you also need to reconcile or understand what the effect is on the sales versus the cost of goods sold, because now we're expensing the items as they happen, and we may or may not be invoicing the items as they happen, right? You might be invoicing at the end of the job or some kind of process invoicing as you go. You need to understand the relationship between the sales and the cost of goods sold when you're looking at the income statement. So we're going to then say this is going to go directly to the cost of goods sold. This is what's different. That's why it's orange instead of the work in process. The other side is going to be going to the raw materials. So it goes out of raw materials into the cost of goods sold. It's going to be for the amount of equal to the 100,000 plus the 170,000 plus the 80,000. That's going to be the debit and the credit. So what's going to happen is cost of goods sold. We're just going to skip all the way down here and record the cost of goods sold here instead of waiting till the end. And then we're going to record the other side to raw materials. Now, if you're used to doing a job cost system in formal kind of accounting, you're going to say that's not, you shouldn't do that, right? That's going to distort things from an accrual basis. And if it's a long job, that's true. It just depends on what the job cost system is, but it's a more simplified method, and especially if there's shorter jobs, then it may be easier to do because then the timing difference will be small anyways. So you just really need to consider what's easiest for you to do or what's best for you to do, and then realize what the other impacts will be. What do you need to do at the end of the year for taxes? What do you need to do at the end of the year for bonding? What do you need to do at the end of the year for it to take a loan out? And those kind of things. Work with your accountant to be able to make the adjusting entries. So the other side then is going to be going to the raw materials. Something's in it. I'm going to double click on it, go to the end of it plus, and go to the raw materials. And then now we've done something that cost of goods sold. Therefore, we have to go to the job sheets. So in the job sheets, I'm going to say that we have the 100, the 170, and the 80. Now, before we do that, note that we already had these 2 jobs open. Here's kind of the reconciliation item that's a bit tricky that we need to account for given the timing difference, given that these cost of goods sold is going to close out to the capital. So we want to be able to reconcile so that, again, any kind of adjustments to complete a contract or an accrual basis or a percentage of completion can be done at the end of the time period. To do that, we need to note what the beginning balance is. The beginning balance is this 83,000 for the 2 open jobs, right? Those 2 open jobs are 83,000. That amount isn't in the beginning balance and cost of goods sold. Why? Because it closed out to the equity section. It's part of this capital number. So that number is part of the capital number. That's what we need to reconcile. And when we do the job cost sheets, we can do that because we'll be able to see, okay, these are the jobs that were open as of the end of last period, and that amount here has been closed out to the equity section. That is accounting for the 83,000. Therefore, our open jobs as of now add up to 83,000 before this, and that 83,000 is what reconciles to the cost of goods sold before we do the entry is 0. That 83,000 is in the capital account, right? So that's the reconciliation we need to be able to kind of do for an adjusting entry to happen at the end of the period. We'll talk more about that when we go through the problem. But so here we go. We're going to say then that we're going to allocate these 100, 170, and 80. So the materials are going to be 100,000. 100,000. Is that right? Yeah. And then this is going to be 170,000. And then the 80,000 down here, 80,000 for that job, adding those up. That adds up to the 350. Now to reconcile this, all these add up to, all of our open jobs add up to 433,000. What's on the trial balance on cost of goods sold is the 350,000. the reconciling item are the beginning balances here that closed out to equity. So that's, that's how we could basically tie out all the jobs that are open. Now in QuickBooks, you can actually tie out, jobs that, just the portion of the job that happened in the current period. And we'll see that when we get to the QuickBooks portion. So we're going to go back over. We're going to go then to the next one, which is the direct labor. So same idea last time, it went to work in progress because it's part of the job. This time, it's going to be going directly to cost of goods sold. We're simply just going to skip all the way down and expense it. And then we're going to say that the other side is going to be going to cash that we paid. So this is like our payroll. Instead of debiting payroll expense, last time we put it to work in process. This time, putting it to cost of goods sold directly. Then we're going to say this is going to be for the $30,000 plus the $68,000 and the $120,000 though. I wasn't done there. And plus the $120,000. And that's the debit and credit. Now the cost of goods sold, similar to the work in process, is always going up for all these items that are attributed to it. F2 plus F2, cost of goods sold, is increasing, and the cash is now going down. So the net income now is being affected as the job is going through. The revenue is not being affected unless you're doing some kind of process billing as the job is going through, which it could be possible that you do that. I don't know. But then, so now we're going to go and we've posted this out. Now we're going to record it to the jobs because we posted something to the cost of goods sold, 30,000 to 14, 68 to 15, and 120. So 30, 68, 120, 30,000 here. 68,000 here and 120,000 down here, 120,000 down here, and that's going to be our 3 jobs. If we add those 3 items that we just added up, that adds up to the 830,000. If we look at all the open jobs now add up to this 1,263,000. What's on the trial balance is going to be, and we have a problem here. This should be 68. There's too many zeros. 68,000. So now if we add these up, they add up to 218,000. That's the number we want. And then if I was to reconcile, we add up all the jobs. They add up to the 651. And the trial balance adds up to 568 in cost of goods sold. The difference is the beginning items. And that allows us to reconcile out the job cost sheet. So then if we go back over and see the next one is when we applied out the factory overhead to the jobs. Now this time what we're going to do is we're going to actually apply out the overhead as they're incurred. And so we're going to apply them out to cost of goods sold as well, eliminating the need to go into the factory overhead and back out of it. There are pros and cons with this too, because as we said before, some of the factory overhead amounts that we need to apply the jobs don't happen till the end of the month. Which means to do it accurately, to apply the actual amount, you may have to keep the job open till the bills come in, till the end of the month happens, to do the final billing on the job so that you can properly apply the overhead. You're also going to need to do some type of estimate between the jobs, not based on last year then, but based on the current open jobs. You have to estimate which jobs are going to take how much of the cost that we're going to allocate. However, if you do that, then it would be then it's an easier process to do because we don't need to then go to factory overhead. We don't need to do the allocation method, and we can just basically allocate directly. So that means we're going to skip number 16. So you can see it's a little bit easier. We're not going to do that allocation method, and we're then going to go to the actual overhead costs. So we had the actual overhead, the indirect labor paid. So we paid someone indirect labor like the supervisor or someone working in the factory on all the factory that we need to apply to all the jobs. We would then normally debit the wages payable or the wages expense and credit cash. Now, instead of debiting work in process or instead of debiting the factory overhead, we're going to apply it directly to the cost of goods sold. We're just going to say this is going to be cost of goods sold, and then we're going to apply it out directly, and then the debit or the credit that is going to go to cash. And that's going to be for the amount of the 14,000 debit and credit. So if we record this, it's going directly to cost of goods sold, as opposed to last time it went to the factory overhead. It didn't go to work in process, it went to factory overhead. This time I'm going to put it to cost of goods sold like we have before. And then we're going to put it to cash. The other side's going to cash. So there we have that. And then because it went to cost of goods sold, we have to allocate it to the jobs. Now that means that we have to come up with some type of percentage that we allocate to the job based on the relative size of the jobs to each other. So in this case, we chose the percentage of 19, 33, and 48. To do that, you would need to have some kind of cost driver. You'd have to say, well, how big is one to the other? You could do something like, well, comparing the labor as of this point in time, this, and this, and seeing what the relative ratio is. In other words, if you took the labor for this and the labor here, or let's do them in a row, the labor here and the labor here, you could say the one with the most labor should get allocated the most overhead, right? And then you could total this up, sum this up, and then you can come up with a percentage, which would be this divided by the total. And that would be this divided by the total, and this would equal this divided by the total. And then if we summed this up, you could say, okay, I'm going to allocate out between the percentage of the 20, the 29, and the 51, right? Whatever the actual cost is. So that any kind of method that any kind of reasonable method that you would use, it could be based on the labor, or just based on the size of the job. However you want to do that, come up with some kind of ratio that you're going to allocate to the current jobs that are open. We have chosen the ratio of 19, 33, and 48, which add up, of course, to 100. So this, and this. So all we're going to do then is take that amount and apply it out based on those ratios. So this would then equal the 14,000 times the 19%. This would then equal the 14,000 times the 33%. And this would then equal the 14,000 times the 48%. If we add those three up, it adds up to, of course, the 14,000. The total jobs now add up to the 665, and then what's on the cost of goods sold is the 582. The reconciling item is the $83,000 beginning balance. All right, so we're gonna do the same thing for all the ones that went to overhead last time. So the next one is to the indirect materials. Same kind of thing. We're gonna debit the cost of goods sold, and then we're gonna credit the cash for the indirect materials, and the amount there was for the 30,000 debit and credit. So the cost of goods sold is going to go up. I'm going to say F2 plus F2 by the 30,000. The cash up top is going to go up. I'm going to say F2 plus F2 by the cash is going down. Sorry, cash is going down by the 30,000. That puts us back in balance. We then did something to cost of goods sold, so we need to reconcile it over here. Same concept. We're going to take that 30,000, break it out between 19, 33, and 48%. Therefore, here I'm going to take the 30,000 times the 19%. This is going to be equal to the 30,000 times the 33%. And this is going to be equal to the 30,000 times the 48%. If we were to add those all up, they add up to the 30,000 there. And then our same reconciliation item looks good here. We're still in balance for the reconciliation. Then we're going to say that we had the utilities, same thing. We're going to say we have a cost of goods sold debit. Cash is going to be the credit. So I'm going to go up top and pick up the cash for the credit. That was for the amount of 12,000. 12,000, same concept here. We would then debit directly to cost of goods sold for the 12,000. Now note, something like the utilities might not happen till the end of the month, like we said. So the job, you're going to have to basically wait till the end of the month in order to apply the actual utility bill, even if the job was still open, in order to finalize the job at that point in time to have the actual allocation to it. So just realize that that's one of the reasons an estimate can be useful. So in any case, we're going to go to the cash plus, and then that's going to be the credit. That puts us back in balance. We did something to the cost of goods sold, so therefore we have to do something to the jobs again. So within the job, we're going to say this was 12. This equals 12,000 times the percentage up top, the 19%. This equals the 12,000 times the 33% up top. And this equals the 12,000 times the 48%. If we add those up, they add up to 12,000, and we're back in balance with the reconciliation over here. So let's do this another one. I'm going to go back up top. I'm going to unhide these cells. I'm going to put my cursor on F or E, scroll over to L, let go, right click, unhide. Then put my cursor on B, scroll over to F, let go, right click, and hide. The next one we want to take a look at is the rent. Same thing, rent on the factory. We're going to take it directly to the cost of goods sold account. The other side would be going to cash. The amount we want for the rent is 20,000. Debit and credit, same journal entry. We're going to be increasing the cost of goods sold. And we're going to be decreasing the cash. We're going to decrease the cash. So there we have that. We did something to cost of goods sold, so we're going to do something to the job sheet over here, which is going to be equal to, I'm going to say, the 20,000 times this percent. This is going to be equal to the 20,000 times that percent. And then this one down here is going to be equal to the 20,000 times that percent. If we add those three up, they add up to 20,000, and we're back in balance over here with the reconciliation. Now the last one's the one with a bit of a twist. That's the depreciation, which normally we memorize that to be a debit to depreciation expense and a credit to accumulated depreciation. This time we're going to debit cost of goods sold because it's going to cost of goods sold once again. The credit, however, not going to cash, but same as it would for the depreciation journal entry, accumulated depreciation. Same as we did with the last problem. That one is going to be for 30,000. 30,000 debit and credit. Cost of goods sold then. I'm going to say that this is going to be F2 increasing by the 30,000 again. And then the equipment depreciation is going to be increasing 30,000, decreasing the book value. Once again, we did something to the cost of goods sold. Therefore, we're going to have to support that with our ledger over here. So we're going to say this equals the 30,000 times the 19%. This is going to be equal to the 30,000 times the 33%. And this down here is going to be equal to the 30,000 times the 48%. Adding those three up adds up to the 30,000, and we're back in balance here. All right, so then we've allocated all the overhead now, and notice everything's going directly to cost of goods sold, making our profit and loss look really bad because we don't have any income yet. It's possible that if you're working the job that you could be invoicing as you go too. It just depends how you're going to be processing the job. So just realize that because if you're not invoicing, you got to realize that the cost of goods sold account reflects costs of jobs that haven't been invoiced yet. All right, now we're going to go back over. And we have then that we have a transfer of the job. Now, we don't need to transfer the job now because last time we transferred to work in process to finished goods because it's already in cost of goods sold. So we don't need to do the transfer process. And then we're going to say that that one job was sold, that being job number 14. So I'm going to go back over here and I'm going to say, all right, this job now is not open anymore. It's been closed. So I'm going to say this job is closed. It's going to be going into the closed jobs over here. So I'm going to say it's on this side, it's closed. And then we're going to go over now what we still have to do the 1/2 of the journal entry. Remember last time we did 2 halves of the journal entry. We did 1, the recording of the accounts receivable and the sales. We still have to do that. And then 2, we recorded the decrease in the finished goods, the cost of goods sold going up. Decrease here, cost of goods sold going up. We don't have to do that because it's already in cost of goods sold. So see how it's a little bit simpler here. So this time we're going to take the total in our job, which is the 191,140 times 30% markup, 0.30. That's going to be that amount plus the original 191,140. That's going to be the 248,482. So what we're going to do is bill the client, invoice the client. We're going to invoice the client and say this is going to be equal to the accounts receivable is going to go up. Sales, income, revenue, whatever you want to call it, it's going to go up. It's going to go up by, we're going to take the cost of the job times 1.30, 130%. That's what we're going to mark it up by. And you can't see that. I calculated it over here. 1.30. There we go. There's what we're going to do. Now, we don't have to do the other side again. We don't have to do the cost of goods sold side. That's why it's red. So we're not doing that side. We're going to say, all right, the accounts receivable is going up. People owe us the 248,482. Sales is going up. So now this is our revenue. These are our expenses. This is a loss. Why is it a loss? Because it represents two jobs that we haven't billed yet for. So and so that's what we have. But the cost of goods sold is already there in that amount. Now, the last thing we want to consider with this format, note that this is not really the normal accrual basis, because normally under an accrual basis, which is more like a completed contract kind of basis, you would think that you wouldn't bill the job until it's done, because usually you like if it was a normal thing other than a project, you wouldn't bill it until you're done with the work. So that's the time you're supposed to recognize the revenue. Now, if it's a long project, then under normal accrual, that means you wouldn't really bill it until the end of it, However, oftentimes you might do process billing in reality because it's going to be a long type of job. So in any case, if you had to do an adjusting entry at the end of the time period to tie this out to like an accrual basis or a completed contract basis or a percentage of completion basis, just like you would under the prior method, you'd have to be able to, as long as you know how this report ties out to this report, then your accountant can do that for you. So if this method, in other words, gives you the information that is useful to you to do, and you can work with your accountant to make the necessary adjustments for tax preparations and financial statements and whatnot at the end of the year, then this method might be easier to do, even though it's not the general accrual method that you might use. But again, you probably might have to do an adjustment no matter what if you're on a completed contract or for taxes and whatnot. So if this is useful to you, just make sure that you work with the accountant that they can then make any period end adjustments. What would that period end adjustment look like? Well, we would say that the amount in work in process should represent these two jobs that haven't been closed, right? In work in process, if I was on a normal accrual accounting, we have these two jobs that haven't been sold yet. So we're going to put them into work in process or into work in process and finished goods. I'm just going to put them into work in process now. So that would mean that the adjusting entry, all we'd have to do is adjust at the end of the time period for whatever, for taxes or for, financial statement reporting. We'd have to increase the work in process by the two jobs that are still open, which is going to be the ones indicated by our job sheet, this one and this one. I'm not going to put it into finished goods. I'm just going to put it into the work in progress. So that would be, let's do that again. I don't know what happened. This one and this one. So that's going to increase the work in progress. Then what we would do is we'd have to account for the fact that we had part of the items in the capital account because it rolled in. That's our beginning balance. So we'd have to say, and could be called equity or retained earnings, depending on the type of organization. That's going to be the $83,000. That's our reconciling item, that $83,000, and the rest is going to be decreasing the cost of goods sold. The cost of goods sold is the difference. That would be our adjusting entry. And you'll see if we entered that periodically at the end of the time period to just reconcile, to be on whatever financial statement, to be on a tax basis or whatever, then we would go back to the work in process, and we could then just say that we wanted to go to the work in process, the capital account, and then the cost of goods sold, which would reduce the cost of goods sold down to just the amount in cost of goods sold for the current time period that had should be applied to the current time period, which of course is only job number 14, the one that we had completed. So your accountant then can do that adjusting entry at the end of the time period and then just remove it or just do what they need to do to do the taxes and whatnot, and then keep you if on your normal system. Just then reverse that for the normal system so that you're back to where you are and you can keep it going. It's just a timing difference between those two items. As long as you can reconcile out the job cost sheet to the cost of goods sold or work in process, finished goods, however you're tracking it, then your accountant should be able to do whatever reconciliation is necessary for whoever needs the numbers in whatever format they need them.